empty units, no cash. I at least have a month or two of no cash coming in. That in theory is my vacancy rate. That is what is affecting my bottom line as far as dollars when I calculate vacancy rate, when I'm looking to understand my performance on my building. I'm going to suggest to you, having been an investor, that my vacancy rate is only one of the effects that I need to consider when I have an empty unit. I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. I want to talk about your real estate education. The two primary assets that I would say that you have in real estate is your network and your education. You being able to have the knowledge base that you need to get something done and get it done well. Having the team you need to get something done reliably and done well. Those are the things that I found have been hugely, hugely helpful in my being successful in my real estate investing. It's not just my cash. It's not just my capital. My cash and capital can be deteriorated away and eaten away pretty quickly by an incompetent team. So really, the thing that when the rubber meets the road, the thing that you're going to need as a real estate investor is your knowledge or experience, which can be built by education, and your network. So let's talk today about vacancy rates. Vacancy rates, they occur on single families, they occur on large multi-units, they occur on small multi-units, they occur inside of retail spaces as well as office. But the one I am the most familiar with, which is what you guys probably are familiar with as well, is residential. So let's talk about vacancy rates here for a minute. What does it really mean to you as an investor? Let's talk first about the definition of vacancy rate. The vacancy rate is the percentage of all available units in a rental property, such as a hotel and apartment complex, that are vacant or unoccupied. I got this definition from investortopia.com. So let me repeat that. Vacancy rate is the percentage of all available units in a rental property that are vacant or unoccupied. Okay, that makes sense. But what does that mean? It means that you have a vacancy rate of 5%, which we do have here in Southern California. 100 units out of a 100-unit apartment building, 5 units in theory will be empty at any point in time over, I would say, a year. But it's any point in time, right? So it's really like Tuesday, August 25th. 5 units will be empty. Is it always exactly 5 units? Of course not. Sometimes that's 3 units. Sometimes it's 10 units. Sometimes it's 1 unit, but it happens over a period of time. Really is what the 5% ends up being calculated over. It's really not just August 24th at 1 p.m. Although that is in theory how vacancy factor works, is that it's any point in time. But really it works out as an average number over about a year's time. If you have 100 units, then you'll probably have 5 units empty at any point in time. If you have 10 units and you're a mom and pop investor, what does that mean? That means you might have a half a unit empty at any point in time. Now let's talk about how that really plays out in reality in my experience. I have owned smaller buildings, 50 units, 30 units, 4 units, single units. I have participated in larger buildings, but the direct ownership that I have had under my name, pretty much for me and not necessarily with partners, has been in that size of units. So 10 units is a little closer to what I experience in my own personal investment career versus having other people invest with me. So what I see in 10 units is that it takes, if it's a half a unit in a period that I'm seeing empty, it can take me 2 to 3 months to churn a unit. So what does that mean? That means if it takes me 2 to 3 months to churn a unit and I have a half a unit a month is going to be empty, that generally means that I will have about 2 units go empty a year. Why? Well, I have a half a unit a month. It takes me 3 months to turn a unit. So it takes me 3 months to turn that half. Well, I need a half to be whole. That means 6 months. So 6 months of a single unit being empty becomes 2 units in a year. I'm trying to explain the math as clearly as I can. And if I'm confusing to people, I apologize. You should check out the comments, by the way, on my shows recently. I've been having some really good comments from some people who are very good at math and very good at understanding real estate. And you should go check out those comments because they have some very high level comments about multi-units and value in multi-units. So it'd be helpful to your real estate education. So check out show 102, 104, and 110, and you'll see a commentary I have going with a particular viewer there that I think you should check out, having to do with math and really understanding the math on a building. I try to make my concepts here relatively simple and approachable, but I would definitely check out those comments for maybe a little more. All right, so back to the vacancy rate. So vacancy rate, 5%, 100 units equals 5 units in any point in time as average. 10 units would be a half a unit in any point in time. It can take 2 months to turn an empty unit. And since I'm only counting a half, that would mean my 2 months would become 4 months, quote unquote, 4 months in having a version of an empty unit. And then if it took 4 months for that vacancy factor to take effect, that would mean I have 3 units in a year. If it ends up being that it takes longer, maybe I might have 2 units in a year, but 2 to 3 units in a year. I'm trying to explain the math. Sorry if it's confusing. Now let's move on to the next piece, vacancy rate. So if the definition of a vacancy rate is really that first line, empty units at any point in time, that makes sense. I don't get cash in when I have an empty unit, right? I have an empty unit. It's vacant. Nobody's paying me rent. Man, that's not any fun. That can happen for 1 or 2 months. Let's just assume for a minute, it's just 1 month. Well, actually, let me give you the math later. Empty units, no cash. I at least have a month or 2 of no cash coming in. That, in theory, is my vacancy rate. That is what is affecting my bottom line as far as dollars when I calculate vacancy rate, when I'm looking to understand my performance on my building. I'm going to suggest to you, having been an investor, that my vacancy rate is only one of the effects that I need to consider when I have an empty unit. First effect is I have no cash coming in on an empty unit. That means I'm losing return. Second is I'm prepping that unit. In preparing that unit for that next tenant, I'm putting cash out in order to prepare that unit so that it's clean, neat, and tidy, clean, comfortable, and contemporary for the next renter. And I'm paying marketing or concession fees, which also means less cash out more cash out or less cash in to me as the property owner. So I hear that my vacancy factor is 5% in LA, and we love that. That's really great because it's not so good in Texas. It's 8 to 10 in Texas, but I'm still putting more value, cost, not to mention time and effort, but just cost into that empty unit. So let's look at that as a total cost. Oh yeah, and how to bill you against your security deposit. Which state you're in changes how you get to bill against your security deposit. Southern California, really we're a tenant's rights state, so we can't bill as much against the security deposit as maybe you can in Indianapolis or in Knoxville, Tennessee, other states I have owned in, where we can be more aggressive about using the security deposit to cover some of the costs of prepping the unit for the new tenant. So vacancy rate, what am I considering? I have no rent coming in. Boo, I use a month or 2 of rent right there. I am spending money prepping the unit, and some of that money I get back from security deposits, some of it I don't. And 3, when I'm marketing the unit or I'm having to offer concessions to get the unit rented, I am again taking a financial hit. What does that look like? What it looks like to me is that my vacancy rate, which I'm calculating for in my purchasing, means an empty unit, no cash. Let's say it's $1,000 a month. I have 1 month, that's $1,000 lost. But I have to prep that unit. And maybe it cost me $2,000 to prep the unit. But because I could bill against the security deposit, which I'm holding, $500 of that, I'm now paying $1,500 out of my pocket to prep that unit. So I've got $1,000 loss of rent, $1,500 left in prepping the unit. And now I'm going to offer a concession of half month rent free in order to rent that unit. That's cost me another $500. There are other things that can be built against this same concept of what a vacancy really means in my building. There are things that I don't even have here, like property management companies will often bill a half a month to you of lost rents for them to be able to rent out the unit. Sometimes they might charge you marketing costs directly if you're advertising in papers. Sometimes they don't. Sometimes they hold open house fees above and beyond the rental fee. But really, what I want to talk about here is the math. So let's get back to the math problem I have here on my screen. Now, if you're listening to this as a podcast, I'm trying to give you enough verbally so that you don't need to see my screen. But if you are wanting to see it, then you can go to Christina Suter, youtube.com, and you can absolutely see this as an actual video, or you can go to Roku TV, Christina Suter. All right, I have an empty unit. I've lost $1,000 in my empty unit for that 1 month of rent that's empty. I have now prepped my unit, and it cost me $1,500 above and beyond what I got to keep from the security deposit. And I have done a concession on this unit of a half a month's rent, which is $500. My total cost to me is now $3,000. My total cost to me is $3,000. So let me explain to you why many older real estate property owners are not quick to turn a unit. They're not quick to piss off their tenants. As a matter of fact, and they're not quick to increase rents. Bottom line, they're not quick to increase rents. Here's the math. If I just spent $3,000 prepping this unit for the next tenant, and I've been able to get a $50 a month increase on my unit, that's if it's $1,000, and I've increased it by $50, that's a 5% increase in rents. Completely reasonable, completely possible. Generally not much higher than that. I got $50 more a month, but it cost me $3,000 to replace that tenant with somebody who would pay $50 more a month. It takes me 5 years. 5 years to make up that difference. I know the math is outrageous and people are going to be leaving comments about this, and I want you to leave comments about this, but just run the math. If I have $1,000 a month in rent and I want to increase that by $50 in a month, $50 in a month, then that means it's going to take me 60 months of increased rent to replace the total cost of what it meant for that unit to get empty. Am I telling you to not empty your units? No, I'm not telling you to not empty your units. I just want to make that really, really clear. I am not telling you that you shouldn't aggressively rehab your units or intentionally continue to raise rents. Because if you don't raise by the $50 a month, guess what? You end up behind all the market rents, and the value of your cash goes down. Your cash flow goes down, but the value of your building also goes down. So I'm not saying you shouldn't increase your rents. As a matter of fact, I'm saying you should increase your rents. I am explaining to you why people can be hesitant to increase rents is because looking at a true vacancy, the total cost in my world, in my definition of a vacancy, my $1,000 of lost rent has just turned into $3,000. That costs me money. Is that calculated in my anticipated costs when I go to buy a building? Absolutely, it's still calculated in there. It's in my maintenance factor. Why? Because you can see $1,500 worth of what I had was maintenance. It would have fallen under repairs or maintenance. So it's in there and it's in my calculations. So if people try to tell you, oh man, there's going to be hardly any maintenance, it's a brand new building, I'm going to suggest to you, yeah, it's a brand new building, but as soon as you lose a tenant, you're still going to have some repairs and maintenance to apply to even a brand new building. So this is some things to consider when you're considering how you understand a vacancy factor or vacancy rate on a building. Yes, it is 5%. The true representation of that number under vacancy rate is the unit being physically empty. But that is not the end of what it means to you as an owner having a vacant unit. This is Christina Suter at ChristinaSuter.com, Roku TV, YouTube, iHeartRadio, Spotify, and iTunes are all platforms that you will find my information. Do not forget that we do interviews on Monday. We do EDU shows on Friday. There's also our Tuesday tweets and our Wednesday calendar. And Thursday is a Thursday might be a case study or a project update. But check us out if you're interested in your education. Then I hopefully have some good content for you.